Awesome. Welcome everyone to another beautiful simulation session here. Today it's Sunday, 5th June. In some parts of the world, it's still 4th June. I think trading. Okay. Awesome. Let's set up a date over here, random date we're going to set up, and then we're going to continue on. So we're going to choose like 15 dates, and this is going to be between January and May. Let's do that. Or actually, let's go back here a little bit. 2021. Yeah, January is fine. We'll do that. We're only going to choose Sundays because Sundays is when the markets are open. All right. So this is what we got right here. February, March, May. We have, oh, okay. We have July 4th, 2021, August, March. What's this? July 4th, 2021. Awesome. Let's do that. July 4th, 2021. So we're going to choose 2021 from here. We're going to choose July 4th, 2021. Perfect. The amount that we're going to start with, okay, let's choose gold over here first. July 4th. Amount we're going to start with is going to be, let's say, 3,000. Okay, let's start with 3,000. New York close, pip amount, leverage. We'll keep it at 1 to 100. Spreads, we're going to leave it as, let's say, like, we're going to do, like, 1.5 pip spread over here. Initial history on the charts, we want to see around 250 days. I'm not sure how far back of history I have, so I'm just going to choose 250 days. This just basically means commission per lot. Commission per lot doesn't really matter. It's, okay, whatever. Do it at. I'm not sure how much this is going to be because I've never done this, but it doesn't really matter. What matters is 4th of July is US holiday. Okay, we'll see. But now 250 days, 250 means that we want to see 250 daily candles to the left hand side. That's all what this means at this point. So let's start simulation here. We're going to load up the charts here slowly. We're going to load up the weekly chart. We're going to load up the daily chart, and then slowly we're going to keep uploading charts. 4 hour, 1 hour, 30 minutes. I'm not sure if we should load up the 15-minute chart, but yeah, we'll do it. We'll do it. All right, let's start loading these bad boys up. We have what, 4 hour? We need the daily and the weekly. Perfect. So this is what we got right here. Now, first things first, what we need to do is we need to go towards we need to go towards the time that we're really going to be trading, right? And in this instance, let me see if we're still recording. Okay, we are still recording. Okay, so we're going to go towards around 6 a.m. Eastern, and 6 a.m. Eastern is pre-New York session when there's volume. So we're going to just like, go next bars that we go towards that time. This is 900 hours. This is 1000 hours. 1000 hours is basically London Open, right? 3 a.m. Eastern. 4, 5, 6. This is 6 a.m. Eastern now, right? So first of all, what we need to do is we need to do top-down analysis. Top-down analysis is going to be from the weekly all the way down to the daily. Now, this is Independence Day, 4th of July. I know that. I know some people will mention it again and again. It's the 4th of July, but we're only going to focus on price action, right? So weekly candle, basically the previous weekly candle came all the way down, rejected this area, moved up. So there's a probability it may move up, but we need to break above these wicks to continue pushing up, and we don't know that. Let's take a look on the daily. Looking at the daily candles, what we can see here is, let me just fix this here first. And let me get these toolbars, line studies. Okay. So on the daily, we had resistance to the left hand side where these daily candles could not break above. As we could not break above, this daily candle closed above, and now the new daily candle is forming, but we have wicks here to the left hand side as well. Now we need to identify if these wicks are going to have a profound effect of price not going up, because if we do want price to move up, we need price to break above this wick to the left hand side on the daily time frame. So now we're going to move on to the 1 hour time frame or the 4 hour time frame to see what sort of a situation we have right here. So let's do the same scale fix right here. Right. So this is what we got on the 4 hour time frame. On the 4 hour time frame, we can clearly see that the 4 hour candle broke above this resistance on the 4 hour, and we're sort of like, creating a rejection right here. Now, this 4 hour candle, realistically, what we want to see this as to make a lower wick and then continue pushing up bullish, right? That's what we want to see this 4 hour candle to do. But the question is, we want to see if this 4 hour candle has to move up on the smaller time frames, we need price to create some sort of a support, right? Because the only way the 4 hour candle will flip bullish is if the 1 hour time frame or the 30-minute time frame is creating some sort of a support, right? So let's take a look on the 1 hour time frame. Now, looking at the 1 hour time frame, let's scale fix this here as well. Now, looking at the 1 hour time frame, what we can see right here is that we are basically above this resistance to the left hand side, right? Now notice on the daily time frame, we could see all this information to the left hand side, even on the daily daily right here. But when we're looking at the smaller time frames, we're not kind of looking all the way to the left, right? So let's do charts and this. So if we look to the left hand side, we know that there's a resistance right here, which is at 1794. So let's put a line right here. So now where price is, this range becomes a 35 pip range, right? So if we look further left, we can see that this resistance is respected right over here as well. Awesome. So this is what we got right now. We have a support and we have a resistance right up over here. So what we got to do is we have to wait for price to either maybe break below this previous candle to continue down, since we have clean candle here previously. This is a 35 pip range, or we need to break above 1794 for price to continue pushing up, right? And if you look to the left hand side, we can see that if we do break above 1794 or 1795, if you can see price on the right hand side, if you do break above 1795, there's a very, very, very high probability we're going to continue pushing up towards 1806, because that's where we have clean candles to the left hand side, right? Awesome. So we're going to let this play out and we will see whether we can get a candle to break above, close above, or like what happens right here. So we're going to let this form, and then we shall see what price wants to do, and then we're going to react to that price, right? So far, we are basically just forming right here. Let's clone these over to the 30-minute time frame. I'm not really going to look at too much on the 15-minute time frame. We're only going to consult the 30-minute time frame. So you can see right here on the 30-minute time frame. Let me just scale fix this. Scale fix basically means that you can move the charts up and down, right? See this right here? Right. The 30-minute candle has to probably close above this area because this is a rejection area. You can see we're closing bullish, and the next candle is just forming down now. We're at 7 a.m. Eastern at this point. So trading is just waiting. We're waiting. We're waiting for something to happen, because as price comes up, this whole area to the left hand side right here, this is a rejection area, and you can see how the 30-minute candle has closed. Let's pause this here for a sec, and let's take a look on the 30-minute time frame. The 30-minute candle has closed a strong bearish candle. This does not mean that price will continue pushing down, because I mean it could mean price will go down, but realistically we have this wick to the left hand side, right? You could take a sell as price breaks this low, but what you have to identify is that there's this rejection right here, and just below that wick we have another rejection right here, right? So if we measure this, this is what, maybe like 9 pips. So this is not a potentially a good trade below 9 pips. What you really want to see is that you want a candle to break below this wick to the left hand side, or you want this candle to kind of like close bearish like this, right? Once you have a candle closing bearish like this, then you can confidently say that, okay, since we had this candle, it was bearish at one point, it couldn't close bearish, it rejected and moved back up in the range, right? Then you had this candle, it was bearish, it couldn't close below that area, and it rejected and moved up, right? Once you have this candle closing bearish, then you can say that, okay, we have a candle that has done what this previous candle couldn't do, which is close bearish in the rejection area. So all we need is the next candle to break the low to potentially continue pushing down, right? That's what you would want to see. So always visualize what you really want to see, right? So we're going to wait and see how this 30-minute candle is going to close. Obviously, it's 4th of July as well, so that may affect some sort of volume here. And as you can see, price is coming down. It's breaking below this low. It's really not a good trade at that point because it's in the rejection area right here, right? So we have to wait. We're also keeping an eye on the time here as well, right? Look, we have around 15 minutes left for NY Open. Let's see this over here. We have about 10 minutes left till NY Open. Candle is about to close. You can see how we're rejecting in the same area, which is why this is not a very, very good sell here at all. So we have to wait. All right, the 1 hour candle has closed. Let's take a look on the 1 hour candle. See, the 1 hour candle, it has closed bearish, right? Now, based on the 1 hour time frame, this is a very, very good selling opportunity only if this new candle breaks below the low of the previous 1 hour candle. Then we could say that, oh, okay, we have almost like a 33 pip range. We can take a sell. It's NY Open, volume time, but it's 4th of July, right? So even if it's 4th of July, and if we really do want to see this candle move down, we need this candle to break the low of the previous candle right here. Since it's 4th of July, I'm guessing we will continue ranging. Oh, yeah, see that rejection? Didn't really break the low at all, and that's where people, like, get caught out in trades. If this was, let's say, high volume time and there was no bank holiday, there was no 4th of July, then I would have been open to take a sell right here, take a sell right at candle open, keeping my stops above the previous 30-minute candle, and then anticipate it to go down if it wasn't 4th of July. Because for price to really break zones, okay, let me pause this here for a sec. Because for price to really break zones and move through strong consolidation areas and move through, like, these rejection wicks, we need volume in the market, right? Write this down. Volume is the only reason why price will break through wicks. Volume is the only reason why price will break through zones, and volume is the only reason why price will break through very, very strong consolidation areas, right? We need volume, a lot of volume for price to break through stuff. When we don't have volume, we can't expect price to break through those things, right? It's like a car, right? You got a car has gas in it, it's going to move fast. If there's no gas in it, if the gas stations are closed, or if you're in reserve, you're probably not going to want to go that fast because you're going to burn gas a lot faster. That's the same thing that happens with price. When there's no volume, price doesn't necessarily break through zones. When there's volume, price breaks through all the zones. So that's something you got to keep in mind, right? And as it's 4th of July, as a lot of you guys have seen the chart here, is basically just nothing happening at this point. Right, so I mean, yeah, we just consolidate. One thing that we can do, however, is that's something I've been watching is we can, however, have a buy stop around 1795 or a sell stop below 1788 because you can see we've been consolidating now, and we all know the longer the price consolidates, the harder it breaks, right? So as we come off to a session close, we can see this is the start of the new 4-hour candle now, and we're kind of like consolidating here because it's bank holiday. Even if we forward the candle, yeah, see, we're just consolidating here now on the 1-hour time frame. So I think it's going to be a good idea to use maybe like a 1% or 2% risk. 2% risk of a buy stop. Buy stop is going to be what, 42 pips away? That is a lot. 42 pips? 42 pips is a lot? Lot size. Oh, it's lot size. Okay, my bad. Risk. I wanted to do risk, 2% risk. Yeah, that was a lot of lot size. Yeah, it would have been a pretty bad. So we're going to have a buy stop. Stop loss must be non-zero. Okay, stop is going to be, ideally, we would want to have almost like, let's do like 280. So I'm going to buy stop right here. We're going to have a sell stop just below this area around 1788. And this becomes around 300 pips. 300 same and sell stop, right? Now, when the buy stop gets activated, we're anticipating price to continue pushing up because we've been consolidating, and that move may happen during, pre-London or pre-Asian, right? And once it gets activated, only then we can adjust the stop loss. Because when I take my high volume trades or my swing trades, once price is activated, then I see where I can put my stop loss, right? So this is going to be a test of that. Are we going to have question segment? Yeah, sure. We can have the questions segment, but those questions will only be related to the simulation we're doing right now. Anything out of this simulation, questions you can ask in Slack. Let's keep it at that because I know we all are here to learn and all of our time's available. Okay, so yeah, let's let these candles form. Okay. We have price still consolidating. We are in a very, very strong consolidation area. Wow, look at that. Now slowly we're moving in our Asian session, pre-Asian. This one right here. This is pre-Asian session running right here. And now slowly we're moving in pre-London, right? If you look at the time, 4, 5, 6, yeah, slowly. We're moving in our pre-London session here slowly in a few hours. So hopefully, now you can see how long we've been consolidating, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Around 15, 12 hours we've been consolidating here. And I think if we do break below, the move isn't going to be that big. But if we do break above, looking to the left hand side, you can see we have clean candles here, and that volume, if it does come in, we should be breaking above this wick here to continue pushing up to, I would say, like 1806. Oh, we have price has been activated. Let's take a look at the trades right here. Right, buy stop has been activated. Sell stop, we can get rid of it now. The stop is within this range. Now, this is something I've looked at for the past 3.5 years, right? Whenever your trade gets activated outside of an active range, this is an active range between 1795 and 1790, 50 pip range. When it gets activated above a range and above the wicks, rejections and stuff like that, it's okay to have a stop within the range, right? The reason why is that if price is getting activated outside of the range, right, during time when there's some sort of volume, then there's a very, very high probability price will continue pushing up rather than coming back in the range. If price comes back in the range, then it will probably be a rejection above the range and price will just start consolidating within the range. So that's the risk that you're willing to take as price breaks above a range, right? So as we're moving up, we're expecting this candle to close. Okay, so we closed above this range. Let's take a look on the 30-minute time frame, right? So now based on a 30-minute time frame, the stop here we can adjust below the 30-minute candle, right? Because if we want price to continue pushing up, we want it to make a higher high, a higher low, a higher high, higher low, and a higher high. This is explained over and over again in the database in the unlearn and relearn section. What this means on the candles is that if a candle is closing bullish, the next candle will make a lower wick and will continue pushing bullish to make a top wick, right? Which means that the candles are going to keep making your higher lows, higher highs, and higher lows, right? So if we want this candle to move up, we don't want this candle to break the low of the previous candle, but we want it to create a higher low and break this high to continue pushing up. That's what we want at that point. I think this is the first time in a simulation I'm doing that swing trade that I've been doing live on my account. So yeah, at this point, we're just gonna let it run over here, which is pretty. So now as this 1 hour candle has broken the high of the previous 1 hour candle, right, which means there's a high probability for it to keep creating a higher high. So at this point, you can manage your stop and bring it below the low of the 1 hour candle. Because if it breaks its own low, then it's probably not going to continue to go up. Right? So now we're kind of like, trailing the stop at this point. So yeah, so, at this point, you're just managing your stops below the candles. When I let my trades run, I'm only looking at my trades right before the 1 hour candles are closing, right? And as the 1 hour candles close, I'm just bringing my stop below the lows right there. So now you can see the 1 hour candle has closed bullish. The stop is below this wick. Target is around 1806, looking to the left hand side. And basically, we're just waiting for the candle to close. The 1 hour candle, right? Look, we've broken above this area. Our target is right here, 1806, because this was a problematic area here. And if we take a look at the time, look where the 1 hour candle has closed, right? We've closed a bearish candle. So now we can bring our stop below this 1 hour candle because it's still making a higher low, right? Even though it hasn't made a higher high, it's still making a higher low. So as long as the candles keep making higher lows, those are supports being formed, and you can just trail your stops below those areas. And if you look on the 30-minute time frame, yeah, 30 minutes is whatever because the 1 hour candle is a higher confirmation time frame for bigger entries. So now we can just trail our stops below that 1 hour candle. So let's see here now. This is pre-London, and pre-London volume, we have clean candles to the left hand side. See that? See where the 1 hour candle is closed? Now we can further move our stop below the candle, right? Even though this candle has no top wick or no bottom wick, our stops are still in profits and the trade is still open. So whenever a candle has no top wick, there's a 50-50 chance that price will continue pushing up, right? There's a 50-50 chance. So our stop is in profit. We're trailing the stops below the lows of the 1 hour candles, and we're anticipating it to continue pushing up. So that's where we are placing all of these things. And as we can see, price is still pushing up. We're coming closer to 1806. The 1 hour candle has closed. We can trail our stop here further, modify it, move it below the 1 hour candle. And we're coming up towards 1806 here slowly, right here. Wow, didn't really expect this to happen. So if we look to the left-hand side, yes, we're coming up to this rejection area. As we come up to this rejection area, this is where price can kind of have a little problems, right? And this is where I'll make a story on Instagram and say, oh, hey guys, look, I took a trade. It ran in profits. We have clean candles to the left hand side, trailed my stops below the 1 hour candles, closed 90%. Okay, yeah, sure. We're going to close 90% over here. I, I was going to close 100%, but let's close 90%. Put stops below the 1 hour candle. And now there's always a probability for this to happen. It's not going to happen all the time. So you can see one trade risking 2% gave around 7%, right? So now after this trade, we're just going to continue on normal with our day of coming into the pre-New York session here now, eventually. So let's move on. Oh wow, see this? See this now? We've moved away. So this is another note that you got to make, right? We had a zone over here, resistance zone. We broke above the zone with a lot of volume. We continued pushing up. We pushed up, we reached a rejection area to the left hand side. Now we see a candle which is closing with a small body and with a big wick. What this means is that this is sort of like an exhaustion candle right here, which means there's a higher probability for price to reject this area and probably continue pushing down. So I think the stops here are perfectly fine, because if we do reject, we've still secured most of our profits. But if we break this high, we'll see what happens. So let's move on towards pre-New York. So this is a London Open, right? London Open, 3 a.m., 4. Oh, wow. Okay. Let's trail this up over here. So 4, 5, 6 a.m. Eastern, right? Now, this is when we come over towards a New York session. Now, everything that has happened in the past, or everything that's happened during Asian session, London session, just take that out of your mind, right? It doesn't really matter what happened at that point. What matters is, what information do you see right now in the charts, right? And that's what we will look at this point. Now, looking at the 4-hour candle, we can see that price is still very bullish on the 4-hour candle. Oh, my servant is calling me. Hello? All right. He had to feed the dog. He's asking me. Okay, so sorry about that. 4-hour candle is pushing up. We've broken above the zone. Now, as we break above the zone, there's a high probability for price to retrace, right? There's a very high probability whenever price breaks through a zone and moves bullish or bearish, there's a high probability that we will retrace, create support, and continue pushing up. That's what we can identify on the 4-hour time frame. Let's take a look at this on the 1-hour time frame and see. Actually, let's take a look on the daily here too. Now, daily has clean candle to the left hand side. We're pushing up. Let's take a look on the 1-hour time frame. Now, on the 4-hour, we can expect a retracement, but on the 1-hour time frame, what we see over here reading candles is that the previous 1-hour candle, it broke below 1, 2 candles, right? This was bearish at one point, and we broke below the lows of 1 and 2 candles. But we couldn't stay below those lows. If we would have stayed below those lows, then we could say that, okay, now there's a probability for price to retrace, create support, and then move back up. But what happened here, right? What happened was that we closed with an exhaustion, which means that price could not maintain its move bearish. So what happened is that we closed with a, I think like a bearish rejection from the downward side, and now we have a 1-hour candle closing bullish. What this could mean is that maybe on the 1-hour time frame we have more bullish confirmations because we're creating a support. Obviously on the 4-hour time frame we may expect a retracement, but what you got to understand is that the smaller time frames are going to create the overall higher time frames, right? So the 1-hour is giving us some confirmations that, okay, there's a probability we may continue pushing up. Let's take a look on the 30-minute time frame. Looking at the 30-minute time frame, we have a resistance forming right here. right? So for the 30-minute to continue pushing up, we will need a 30-minute candle to probably break above 1808.60, these wicks, for price to continue pushing bullish, right? That's what we would need at that point. So let's see if we do get that confirmation, and then hopefully we can sort of like, react to that. So let me just draw that zone here now. On the 30-minute time frame, we have a support right here, and sort of like we have a rejection down here. So we'll see. We'll see what happens. I think sells below 1803 would make sense, because if we break below this low with volume, we can break below the previous wick, and then we have clean room going all the way down towards 1798, which is 50 pips away, right? But if we do break above 1808, let's take a look to the left hand side and see what information we have looking to the left hand side. Looking to the left hand side, we have price coming all the way up towards 1811, 1810. I think that's a pretty reasonable target over here, which is like, 30 to 35 pips away. We got clean candle right here. So yeah, I think that's going to be pretty good, but we need some confirmations here. So we're going to wait for some confirmations. See, we're creating a lower wick, which is good, right? Probably we could get some sort of an impulse entry here, or if we close bearish, then now, oh, we're breaking above the high at this point. Now, as price is breaking above this high, this presents us with a impulse entry, right? Because if we're breaking above this high after making a lower wick, and you can look at the time, the first 15-minute candle of this 30-minute candle is about to close at this time. So even if we take, let's say, impulse entries, we're going to go with around 1% risk. We're going to take a buy right here. Our stop is going to be below the previous candle, which is like, let's modify this here a little bit, right? Let's bring it up over here, right here, right? So now, as we're breaking above this high, this means that there's a higher probability for price to continue pushing up. Looking on the 1 hour time frame, we can see we're sort of like, breaking above this area. On the 30-minute time frame, we're about to break above this area, so there's a high probability for price to continue pushing up. So let's see over here. Impulse entry. If we do close above, I think there's a good opportunity for price to, for us to add more positions to this possible winning trade. So you can see the pip amount, we're about, this candle is about to close. 15-minute candle has closed. Let's take a look on the 15-minute time frame. 15-minute candle is closing with a rejection, right? Now, since we're in this trade and the 15-minute candle is closing with a rejection, we can close 50%, right? So we're going to close 50%, which means we are managing our risk. There you go. We closed 50%. And we will see if we do get an opportunity to add to this position if price does continue pushing bullish. So we're going to let this 30-minute candle close. If this candle closes bullish, I think that's going to be a very good opportunity for price to continue pushing up. We're coming to a close of this 30-minute candle. Oh, 30-minute candle has closed well below that zone. So now we can close another 50%. See, we're managing risk right here. So we're down at 0.03 now. So yeah, the 15-minute candles didn't provided us with enough information that we're going to continue pushing up. I guess we're breaking below the low there, so we're probably going to close the entire trade. And so if we take a look at this trade now, let's take a look at this trade. This is, we lost about 143, yeah, 143 right here. 143, 200, 250. Oh, these are pips. Yeah, this is right here. 4, 5, 6, 7, 8, 9. $9.50 on 6, 7, 8, 9, 10, 11. 11 cents, we lost $9.50. Not bad for managing risk, right? Because a stop loss was way bigger. A stop loss stated that we're going to lose about $20, but we lost way less than that, so that's still a win. So now we're going to wait to see how this candle is going to close, if we do get some sort of confirmation for price to move up or not. So yeah, we're just going to wait and see. So sell below 1803 or buy if we do break above 18, like, if we get a candle to close strong bullish here for price to move up. And there we go. Candle has closed. Looking at the 1 hour time frame, candle has closed a weak bearish candle. Nothing happening, consolidation. Looking at 30-minute time frame, nothing happening, basically consolidation right here. Nothing. For price to really move up, we need the 30-minute candle to close bullish. Let's speed it up here a little bit. So at this point, the only thing we don't want to do is overthink. Overthinking will lead us to disaster. So we don't have to overthink. We just have to wait for the candle to close. And oh, the candle has closed bullish on the 30-minute time frame. So this probably presents us with an opportunity to realign our zones, right? Because if we remove everything right here, what we can see is that we're creating a support on the 30-minute time frame, right? We're also coming closer to NY Open, which means there's going to be very, very high volume for price to move. Looking at the 1 hour time frame, 1 hour candle. Now, here's the thing. A 1 hour candle is bullish. The first half of the 1 hour candle has closed bullish, right? We're slowly coming up to high volume time. We've been consolidating after London Open through pre-New York, and now we're coming up to New York Open. You take a trade in Asian and NY, do you think next trade going to be over trading? We're not going to talk about over trading. That trade was an example of a swing trade. We're just talking about trading NY Open. Right now, the first half of the 30-minute of the 1 hour candle has closed bullish. The 1 hour candle is open bullish here. With volume coming in from NY Open, what's the probability that the next candle is going to move bullish if we break above the high of the 30-minute handle, or what's the probability that the next candle is going to go bearish? I think buys above the wicks would be good as we have bullish on a 1 hour time frame. Yes, that's correct. So I think a pretty good idea would be to take a buy once this 30-minute candle breaks above the high of the previous 30-minute candle, anticipating volume to continue pushing price up. So once we break above the high, which is going to be right here, we've broken above the high, we're going to take a buy right here. Our stop is going to be, let's see this right here. Our stop is going to be below this current 30-minute candle, right? That's where our stop is going to be, below this current 30-minute candle. This candle has broken the high right here. So I think there's actually, you know what? I think it's still too early. Let's keep it below this previous 30-minute candle if we want price to continue pushing up. Wow, just before NY Open right here. I think we can add a position as price comes closer to NY Open. Okay, so we're pushing up right here. Probably going to secure around 90%. Close. Secure 90%. Put stops to break even. And patiently wait for NY Open now, which is going to be here in about 10 minutes. And looks like NY Open should continue pushing price up. We're coming to a close right here. This is the close. Now, once this candle breaks above the high of the previous candle in 30-minute time frame, this is where there's a high probability for NY Open to continue pushing up. We've been doing this in the live streams a lot of times. When there's a lot of volume, we've been consolidating, price is breaking up, looking at the 1 hour time frame, we've broken up. There's just extremely high probability for price to continue pushing up with a lot of volume since this is NY Open at this point. So what we will do is, since we're in a simulation, we're just going to put a buy stop right here. Buy stop around 73. stop. We're gonna do whatever buy stop right here. We're gonna take a look at the trades over here. We haven't really activated that. We're making a lower wick, which is good, I would say. Oh, our one position got stopped out. And this one has been activated now. Let's take a look on the 15-minute time frame. 15-minute close with a small body. Does not look good right here. This is very, very messy. And when it's very, very messy, when we're unsure, we gotta close 50% no matter what. Oh wow. Did not play out as we expected it would play out, but that's okay. Do we have any news? We have no news. Nothing happening. What do we have here for the next days? We have nothing for the US dollar. Oh, look at that. The last 30-minute candle starts to move up here now. Yeah, this was very tricky. Very, very tricky. This was the only buy right here. The rest was just tricky. Awesome. Um, yeah, let's see how the next candle closes here. Whoa, big rejection here. Insane. Look at the next candles here as well. Nothing. Wow, crazy. Yeah, this Tuesday was very, very tough. Okay, let's move on to the next day here now. Okay, we continue moving down over here. Crazy. Very, very, very tough. But the thing is, we managed our risk, right? We did not risk more than we wanted to risk. You can see right here, this was buy right here. It got stopped out. We didn't risk more than what we wanted to risk. So we're still up in profits from that one trade. Let's move on towards the next New York session, which is, this is London Open, 3, 4, 5, 6. We're back at pre-NY now. We've forgotten about whatever happened in the past, yesterday, all that stuff. We've forgotten all about that. Now this is a new day. This is new opportunity to take another trade and potentially make some money over here. Okay, let's take a look on the daily time frame. Daily candle is moving up. We're coming up maybe to fill this wick. If the daily candle moves up to fill this wick is around 82 pips, right? So for price to fill this wick, we need maybe some sort of support formed for price to fill that wick. Looking on the 4-hour time frame, 4-hour candle is also pushing bullish. Very good probability for price to move up. 29 pips away, 30 pips away, this range over here. Let's take a look on the 1-hour time frame. Looking at the 1-hour time frame, we have created a support right here, and there's a possible resistance right here where price can move into, which is 50 pips away. Pretty good idea for price to move up. So we're going to see how that pans out on the 30-minute time frame. Let's take a look on 30-minute time frame. Now the 30-minute candles, we're creating a support. We have a 30-minute candle closing with a small wick on the top, which means there's a 50-50 chance. Plus also we have this rejection area to the left hand side. So ideally we would want price to maybe, like break above this area for price to move up. Yeah, we would need price to break above that area. Also, maybe we would need the next candle to close because this candle literally has a very, very small wick on the top. And if we study, what it means when candles have no wicks on the top or very small wicks on the top and they're bullish, there's it's a 50-50 chance that price will continue pushing in that direction. So the rule of thumb for me is to basically wait for that candle to close. So we're just going to wait for this candle to close. You can look at the time. We're about, 22 minutes into this candle. It's about to close. We're going to see how this candle is going to close here now. Okay. So the candle has closed bullish. And we've closed above this resistance. For price to really move up, we need this candle to break above the high of the previous candle. If we do break above the high of the previous candle, then we could possibly take a buy for price to continue pushing up. Because the 1-hour candle is still open right here. And oh wow, I guess looks like the 1 hour is rejecting over here. Let's wait for the 30-minute candle to see if we are going to break above the high. We don't know whether this 1 hour candle will continue pushing bullish or reject, because the 30-minute candle, it's pulled down for liquidity way too much. And liquidity means where price is going to make a lower wick to continue up. We haven't really necessarily broken the high. Just like, oh, we're about to break over the high over here. In the last, can we take buys on the retracement 30-minute candle, or wait, should we? You can take it on the retracement only if you have enough practice with it, right? Because taking it on a retracement means that you're really anticipating price to continue pushing bullish or making that lower wick. But the benefit of that is that you're getting a very, very good entry for a potential move up, and you can secure as price comes up to your take profit targets, right? But here we're sticking to, like, very, very simple analysis. Okay, so the candles have closed. The new 1 hour candle is starting now. The 1 hour candle closed with a, rejection, exhaustion candle. So it's very tricky at this point. Also, the 30-minute candle is closing above this resistance. So, I mean, we need a support to be formed on the 30-minute time frame for price to move up. This is getting increasingly tricky here. It's a Wednesday here now, so this may be a character building session. Oh, we're breaking above this high now. And as we're breaking above the high, best time to trade USD Asian or New York, Mr. Ajay, it's both. So you need to choose which one you want to choose. That's clearly explained in the database. So let's focus on the stream here rather than focusing on things that are explained in the database. We need this candle to close bullish, which is right here. We've closed bullish. There's no wick at the bottom. So this presents us with a very, very good opportunity to take a buy. Our stop is going to be below the previous candle, which is like around 14 pips right here. 1% risk. We're going to take a buy. We're in a high volume time. Maybe, get this stop below the previous candle right here. And yeah, that's it. Let's take a look on the 15-minute time frame. 15 minutes also bullish. 1 hour candle is also bullish. It's bullish at this point. 30-minute candle is creating a support. We have clean candles to the left hand side. Pretty good idea for price to move up. We have about 35 pips. So let's see over here. We are pushing up. We got to take a look at the pip amounts. And we're going to see now, if this candle breaks its own low, then we're going to close 50%, right? So our original stop is around 14 pips. 14 pips represents around, what, $30? So once it breaks its own low, right here, we'll close 90%. No, 50%, sorry. Close 50%, managing risk. Right? But if it breaks its own high to go up, then we can add that risk back if it breaks its own high. Taking a lot of losses here. So the 15-minute candle is about to close, and 15-minute candle has closed bearish. We're going to close another 50%. It's really not playing out in our favor over here as I thought it would, but so be it. And wow, looks like we got stopped out over here. This is tough. This simulation is tough, but the main thing is we're managing risk. Look at this risk here we managed, right? So this trade was a buy trade opened right here, and we lost what? Let's say 8 plus 5, 13, 13 plus 7, 20. $20. We're just managing risk at this point. So this is NY open now, and looks like we attempted impulse entries. We want price to close at this point now. But, we'll see. We'll see what happens. If we do break below this low, measuring this range, it's like a 20 pip range over here. So we're going to see whether price will, what price is going to do. Looking at the 1 hour time frame here. Very, very, very tough. Not giving this any chances here. We gave buys a couple of chances and they just weren't playing out here at all. Oh, looks like we're breaking the low here. We really have to be in sync with the price movement while managing risk. Yes, that is absolutely correct. You have to be very, very, very well thoughtful of where price is moving. So looks like, we're breaking the low here to potentially continue down. I mean, this is what, 18 pips away, 20, 17 pips away. It's not that big of a range. Probably going to stay away from it. Yeah, that was a good idea not to take that sell because the range wasn't enough. So yeah, I guess we're just going to wait for this 30-minute candle to close and see what happens here. This simulation is turning out to be a risk management simulation. Let's see how price is going to close. The 30-minute candle is going to close right here. We closed bullish. Looking at the 15-minute time frame, we closed bullish. 30-minute time frame, we closed bullish. 1 hour time frame is still open. We need this 30-minute candle to break above the high of the previous candle. The reason why, if we take a buy right here, stop is going to be around 30 pips, which is pretty big, right? So if we break above the high, then we can have like a 22 to 25 pip stop, right? And if you do break above the high, I think that's going to be a very good idea to take a buy, but that's going to come into a rejection area here. So it looks like it's going to be yeah, nothing happening over here. Nothing happening here. Character building simulation session. So I guess we're going to move on towards, yeah, look at that here. Just a thought, if we do break below this low, 1803, I think there's a very good opportunity for price to continue down towards, let's say, like 1800. I'm not going to take this trade, just visually watching it. What will be the TP if we enter the break of the half? The previous one, maybe you're looking at around, 1812, this area here, maybe a potential wick fill. As we break below this area, you're looking at price to continue down towards this wick fill, 1800, something right here. When do you redraw zones? So right here, we can redraw zones right here. So this becomes our new zone now. You can see we're breaking down now, so I guess it's going to continue down towards 1800. These wicks here to the left hand side. Oh wow, we came down to 1800 and rejection. Crazy rejections here. What's going on during this week here, man? We're back in this range here now. Damn, tough. Very, very tough. Extremely tough. Just insane the way price is moving here. Let's move on towards the next. Not easy at all. So much consolidation. Let's move on towards next session here. So this is London Open, 4, 5, 6 a.m. Eastern here now. We are, when you read our zone, completely watch previous zones too. Yes, that's correct. So now we are at the new pre-New York session here now. The new pre-New York session. So let's remove all zones. Let's redraw zones. Let's take a look on the daily and the 4 hour and see what's going on. Looking at the daily, we're still bullish, but we're coming up towards a possible rejection area. Looking on the 4 hour, we are still bullish, but we're coming up to a potential rejection area right here. If we want price to move up, we need to break above these wicks. Very simple. Looking at the 1 hour time frame, we are coming up to a potential rejection area, but we need to see what sort of market structure this is on the 30-minute time frame. Looking at the 30-minute time frame, we are creating a support, which is pretty good. We have a resistance right here. Next candle can wick down and break above this high to go up. I think that's going to be a very good idea. Let's take a look at that to the left hand side. Looking to the left hand side, what we can find is we have a range till 1815, and above 1815 we have clean range till around 1816, 30 to 34 pips away. So we'll see how price basically closes above this area, because you know this is an impulsive move up. Let's see if we have any news over here. We have no news today, nothing happening over here. Even till Friday we have nothing happening here. So yeah, let's see how the 30-minute candle moves here. Ideally we would want it to create a lower wick and then break the high to continue pushing up, but looks like we are pushing further and further and further down. This is where patience comes in handy. Patience is your best friend when you're watching price move. Just got to be very, very patient, like a tiger waiting to attack. See right here, it's still retracing. And we're breaking below this low, which is pretty good, because if we continue breaking below this low, then we can anticipate price to, oh wow, this is just incredible movement down over here, but we're staying very patient. We want this candle to close, obviously, because if we can get a candle close, let's say right here, now the candle has closed below the support, we want a retest of 1810 for price to continue driving down to fill this wick here now, which is formed, right? We need a retest for price to continue driving down to fill that wick. That's what we want, a retest. So we want this candle to close below this area for price to continue pushing down. That's ideally what we would want. Or if this candle now can break its own low and we can take an impulse entry for price to continue down and maybe correct this whole move up. But since it's closing back in the range, looking at this 1 hour candle, this is just very, very difficult to kind of see what's really happening over here. Yeah, this is very tough, man. Honestly, this is extremely tough. We are again trapped in the same condition. Yep, we're still trapped in the same condition. Nothing. I literally have my hands on the back of my head because this is just nothing, nothingness. We need some stronger confirmations to really understand what's happening at this point. Let's take a look on the 1 hour time frame. 1 hour just made a liquidity grab, broke above the high and moved up. I mean, it's just insane. Now we have a new candle forming up all the way over there. Either we create a support to move up, or we kind of like, you know, close back within this range. This move up becomes a fake out, and then we can continue pushing down, right? Because look, we broke above this area. If we can create a support, higher probability for price to move up. But if we close below this area, right down over here, then this move up becomes a fake out, and that means there's a higher probability for price to move down and break below this area to continue pushing down. So those are two scenarios that we can kind of like anticipate. So yeah, this is I think this is a very, very good exercise over here. The candle is about to close, the 30-minute candle, and 2 simulation minutes left. All right, we closed back within this range, but the 1 hour candle is still open. We're not sure how the 1 hour candle is going to close. We have a support right here. So yeah, we'll have to wait and see. We'll have to wait and see how the 1 hour candle closes. And for this to be a fake out, we want this 30-minute candle to break the low of this candle right here. And then potentially we can take a sell for price to continue pushing down. So we shall see if that happens or not, which is so far not happening. So, so, so far, the condition is not being met over here by the candle. It's very important for you to know what conditions needs to meet for you to take a trade, and that condition is not happening here today. So this candle is about to close, and yeah, I mean we're just don't understand what price wants to do. I mean, looking at the 1 hour time frame, we're still above this area right here. It's just so tough. I'm just learning how to match our condition for entry. That's awesome. That's awesome. So we're back in this range here now. This could be a pretty good entry for price to move down, but the 1 hour candle is still at the support. Um, Buy here now. I remember this, sir. Oh, okay. We're just gonna stick to what we can see over here. Yeah, I mean, we want to enter on clear-cut confirmations. And since the 15-minute candle is super messy, we're creating the support on the 15-minute. Below this area, we have like a 36, 37 pip range. 30-minute is very, very messy with a lot of wicks here. Let's remove all this, remove this, remove this, and let's redraw our zones, right? Because when things start to get messy, now it will drop. Faisal Osman, I think you should keep your comments to yourself because you may have charts open. So, if you keep on commenting, we're going to remove you here from the stream. All right, let's just wait over here. We got support formed. Let's redraw the zones. Let's draw another zone right here. Now, the new candle will start here soon, and we shall see. Price is still open. We're going to wait for the candle to close. And once the candle closes, we will reevaluate what we'll do. But what we have done is we have redrawn our zones at this point. And the candle has closed right here. Looking at the 1 hour time frame, 1 hour candle is closing above the support. Looking at the 15-minute time frame, we have support at this point. If we do break below this area right here, it's 35, 36 pip range. Looking at the 30-minute time frame, same idea right here, but we have this rejection to the left hand side. So I think we'll need to break below that rejection for price to move down. Wow. Insane the way price is moving over here. Let's take a look on the 1 hour time frame. 1 hour's candle is forming like this. 15-minute candle is about to close. This is a tough week on gold. This is NFP week? No. We started this week on 4th of July. NFP week was the week prior to this. 30-minute candle has also closed. We're breaking below this low here now. We got to break below this wick to continue pushing down because that's a rejection area. This whole area above this wick is a rejection area. So we need to break below that area right here. Right here. We're breaking below this area. This is the last trade that we're going to take. So stop is 30. Let's take a look at the 15-minute time frame. 15-minute stop is right over here. 25. We'll put the stop between this range here, around 22. So we'll do like 1%. It's the last trade of this week. We're breaking below this wick. Oh, wow. Not so good at all. We have a lot of volume coming in. Damn. Okay. So we moved down. Should have taken profit right here, but I was managing this. But you get the idea. We had clean candles here to the left hand side. Close right here. Not easy. This week was tough. This week was a prime example of how to manage risk when things are not going your way, and how to manage trades and emotions when price is basically consolidating. Let's send a text message here. Okay, awesome. So thank you all for joining in. I have to leave. Was getting calls in the middle. Hope this was helpful when it comes towards patience and discipline. Not every week, not every week is a trading week. Not every week is a profitable week. Some weeks we can get losses, but we have to manage ourselves. We have to manage our risks. We have to manage our emotions. Take care, everyone. This will be uploaded in the database. If you don't have access to the database, go through the announcements section, and from there you can get details on how to access the database. So about in a few hours this will be uploaded. Take care and have a great Sunday.